I'm glad to be here tonight, and hopefully I can bestow some information, at least some of the technical tools that I use. And I mean, I know that a lot of people use seasonal, and tonight we're going to talk about what's moving the market and what's out there. So let's get started. First off, this is an important risk disclosure. As Steve mentioned, I've been around the business a long time. I'm still registered as a commodity trading advisor, a CTA. So by law, they would like me to let everyone know that trading is risky. So with that said, I don't know if Steve mentioned, there's a few things that I've done in my career as an innovator. I created an indicator called Person's Pivots, the PPS indicator, which is the most popular indicator used at TD Ameritrade's Thinkorswim site, along with several other platforms like TradeStation and Genesis and a few others. The Candlestick and Pivot Point Trading Triggers, that book came out, oh gosh, it's now been a decade that book came out. Really helped share some important work in regards to a pivot point moving average concept that a lot of other people and educators use to this day. Mastering the Stock Market, as a book came out a year and a half ago, and that book I felt doing more and more work with high correlated stocks and ETFs to the commodity markets, as I was also co-author and editor of the Commodity Traders Almanac. We weren't just doing commodities, we were doing a lot of work with stocks that had a correlated move with the underlying futures markets. And the interesting aspect is when you look at like Potash and Archer Daniels Midland and Bunge, and look at some of John Deere and some of these other agricultural type products, how they do definitely correlate with the seasonal swings, highs and lows, supply and demand functions of the underlying ag space. And so since this is the summertime, we just had Janet Yellen. We had an early swing up, and it's all over the news, and everyone's looking at this explosive move in the gold market, which is something that we were actually prepared for. And I want to go through a couple things tonight because I see this stock market's kind of confused a lot of people, and there's been a few tools that we've used through the years that's been very helpful, and I'm going to share that tool with you guys tonight because I think having a few real good confirming indicators can help you select trading opportunities and look for the health of that market move once you do uncover it. So for tonight, one of the things I also wanted to also make mention is that the Stock Traders Almanac, many of you are probably familiar with this issue, and it was probably the highlight of my career after all the accolades that Steve was nice enough to talk about, is that the Stock Traders Almanac dedicated the 47th issue to me for my work in the field of technical analysis. And that was something really neat because, I mean, that is a industry icon leading book. It's was started by Yale Hirsch some 47 years ago. It's the 47th edition. So it was pretty neat. So with that said, let's just get right to it. Indicators and studies I use: seasonal analysis, stock indices, stock sectors, commodities, and Forex. I believe they all have, again, a supply and demand function of the market, and due to that, there's an increase in demand certain times of the year for certain things. And that's why everyone's familiar with the term sell in May and go away, but that didn't happen this year. And one of the things that we have seen is the technology space, as measured by the Qs, or the NASDAQ 100, has seen a recent rise in strength. With that said, there is some rhyme and reason behind that move. And a lot of people were very confused over the technology move because they looked at earlier this spring, in April and May, there was a lot of weight. The markets were under a lot of pressure, and the bottom line is the NASDAQ was really, it's not a pure, the NASDAQ 100 is not a pure technology play. In fact, it has a pretty strong weighting with biotech. It has other names like Whole Food Marts in it, and Starbucks is in it. So it's not a pure technology play. And for that's why we look at subsectors. And I think the market misses certain subsectors and the seasonality of those subsectors, and I would like to talk about a few of them tonight because those are the ones that I think we're coming into a change, and so there's some trading opportunities within those changes. And I use relative strength comparative analysis to help me uncover what the strength or weaknesses are of the market as measured by a percentage terms over time. I'll show a chart with you and just to illustrate what I'm talking about. Also, I use indicators specifically targeted to the health and breadth of the market. Now, we use advanced decline comparative ratio analysis, and I know a lot of people use breadth indicators as it relates to the stock indices. Most people use the advanced decline comparative ratio on the NYSE because that's all they have available to them on certain platforms. I think it's important that if you're trading the S&Ps or the Dow or the Russell or the NASDAQ 100, that you create or watch or get access to a advanced decline comparative ratio line on those specific indexes. And we're going to talk a little bit about that tonight. Of course, I use moving averages. It helps smooth out of prices, and I use proprietary settings. One of my settings, most people use a moving average based on a close, whatever your time period is. But I use a combination of moving averages based on the high-low close divided by 3, the pivot point. And of course, I do use my person's pivots, and again, in multiple time frames, anywhere from daily, weekly, monthly, quarterly even. Of course, I use other candlesticks patterns to help me with uncovering momentum, looking for the market that closes above prior highs, for example. And we've created some patterns and identified some patterns accordingly to that. So I think once we identify opportunities, now we got to explore risk rewards. And I think this is the key, is what seasonal analysis is best used for, is to give me an idea, like a shopping list, of what's going to be going into a seasonally strong period of time and what's going to enter a seasonally weak period of time. And what's the duration of that trend? And that'll help me to say, okay, if it's a 90-day trend, well, maybe in the beginning phases as a market starts to evolve into a bullish phase, typically a market grinds building a base. And so early in a bull phase, if you're an option trader, you could say, well, I'm going to start maybe some credit put spreads if the instrument is optionable. And as it starts to develop into a trend, you can get with more directional, aggressive type positions. So it all comes down to being able to understand what the phase of a bull market is in and what the length of a bull trend might be in, or the opposite is true for a bear trend. And then again, it's just a matter of selecting your strategy that you want to employ. Now, this chart looks like, you look at it and it almost looks like an abstract artwork from Picasso or something. But basically what you're looking at is all the top sectors and the relative performance from the beginning of the year. And so, as you can see, it's already off the chart, this purple dinosaur Barney type color that I put up here. It's pretty offensive purple, but it's highlighted there to give you an illustration. Since the beginning of the year, this is the semiconductor space, the SOX, the semis. In just the last few weeks, the semis have gone up over 10% in just a few weeks. And that's on top of the rally that we've already had since the beginning of the year. So just taking a look at the performance, I want to say, well, gee, that's a pretty strong move. And it might have been it might have gotten a little aggressively overbought here. So my next using confirmation techniques, boy, what's the seasonal tendency for the semiconductors to maybe turn lower? Because the seasonal tendency for the SOX or the semiconductor space is to go up this time of year. So the second question, I'd say, wow, this is kind of neat. And for the record, we were in some semi stocks which we've just exited this week. So I'm now flat the semi sector, and I'll share a reason why in just a second. So when we look at technology, I'm not just looking at the XLK, because the XLK, the technology sector, it's not a pure tech space. It's just like the financials with the XLF. It's not a pure financial. Many people look at the XLF and say, gee, that the XLF is the financials. Well, the financials, it's not, be descriptive of what the financials are. Financials are not, the XLF is not a pure bank play. In fact, the XLF has the CME in it. It's got Metropolitan Life. It's got which is an insurer, American Express. It's a credit card. So if we want to get more bank or financial specific, we could look at an ETF called the KRE or the KBE. And if we want to look at other financial sectors, we have the real estate investment trusts, and you could look at the IYR. You could also take a look at maybe the capital markets, and which is be like T. Rowe Price. And I'll get to this point in just a minute because we can be more sector specific. So many of you have heard the phrase sell in May, go away, and what it really typically means is that volumes tend to turn lower in the summertime as markets kind of get into that summertime lull. This year I don't think is going to be much different than normal, but it's going to be a little bit, it seems that we have a little bit lagging effect. In other words, the bull trend, the sell in May, go away aspect hasn't really kicked in, but I believe it has been working to a degree for some of the seasonals, and we've been seeing a sector rotational correction more than anything from time to time. So if I just cut to the chase, I will just tell you that there are certain sectors that are underperforming, that are underwater, right? And there are certain, like the KRE is only up 1.6% for the year. We look at the retail, the consumer discretionary, the XLY. Consumer discretionary is only up 4%. XRT, other retail space, is actually negative on the year. And then we have utilities, which are now up almost 18%. So I take a look at some of these names and I go, wow, some of these sectors, and some of them are overbought or relative to the others, and some of them are underwater. So that leads me to believe. Now, if I was going to say, for example, if a sector was going to enter a seasonally strong, seasonally weak period of time, has it been strong? Obviously, the semiconductors, from a perspective of sell high, it certainly has that type of mantra to it, because it has actually just gone straight up to the stratosphere. And again, this particular sector is one that I'm actually looking at right now for a short-term at least a consolidation play, bearish to neutral play in the next few weeks going into the July expiration. Typically, when we see trends that are very strong, we don't see typical V tops. We see kind of like maybe distribution tops. As you've heard the phrase, tops take longer to form than bottoms. So it's important to say if a trend is entering a seasonally weak period of time, has it gone up? I mean, that makes sense, right? Because if I'm looking for something to go down, it better have gone up, and the semis have gone up. So with that said, I look at the semiconductor ETF, the XSD, as it's written up here. There are several sectors to look at. The old days back, and I'm sure, Steve, I don't want to say you're old, but you've been around a while. Usually we could have traded the SMH back in 98, 99, 2000, 2001, back in those days when we had heavy tech exposures. SMH was very heavily optionable traded ETF. The semiconductor, as is represented by the SOX, we could take a look at this chart and say, wow, this does represent that type of performance graph with this purple, as you can see here. Had an uptrend, chopped around, and it just broke out. Had an uptrend, chopped around, just broke out. Now what you see here is a weekly chart. And a couple things I want you to follow through with. I'm sure many of you could probably have heard me before, and I know we see a few familiar faces here, and I see, oh my God, Bluesman, Elliott King, and only because I see the E's and the D's and the A's in here. And there's a few familiar names in here. You guys have seen me talk about the volume analysis, and a lot of people struggle with volume and volume histogram bars. And just as a cute little exercise, I got a couple examples later in the presentation to share with you why I believe it's best to use on-balance volume, as it's illustrated here, OBV. There are some nuances with this indicator. I use it for confirmation of trend. I like to see if the trend is moving up on higher volume, and I like to see if the market makes a breakout. Does it make a breakout on substantially higher volume? Unfortunately for this particular sector, it's broken out in price, but it hasn't gained a lot of momentum by reaching higher volume levels than it did way back here over a year ago when we entered a little seasonal weakness from, say, July going into September. So this time around, we've made a substantial higher price gain. And we've seen this market move 5 weeks up almost in a row with a big, nice move breakout. This red line right here is a person's pivot indicator, and this is looking at a quarterly outlook. Quarterly meaning the financial quarter. January, February, March is one quarter. April, May, June, which it ends right now. So we've just had a nice run up in the semis. That enter and are in their seasonally strong period of time. But guess what? That seasonal strong time tends to end right about now. So looking at the seasonal tendency of the market, it has to have downturns going into the summertime. This rally has been on some pretty light volume according to my on-balance volume indicator. And so now what am I looking for? I'm looking for a trigger. So this is a weekly bar. I think the market's, at the very least, it's due for a little consolidation. So the semis, what we now want to do is a top-down approach. So by seasonal analysis, it's helped alerted me to the fact that the semis are entering a seasonally weak period of time. I look at the relative performance. I say, man, this is a sector that has outperformed. And I gave you guys like almost the kitchen sink of sectors. Let me go back here and share with you what I've thrown in here. I've got XLB, which is the materials. The E is energy. F is financials. XLI is industrials. K, technology. P, staples. U, utilities. Y, consumer discretionary. IYT, that happens to be the transports, the semis. XRT, retail. IXTC is telecommunications. KRE, regional banks. And I just wanted to make sure that you knew that we were looking at a multiple segment sectors here. And so I wanted to focus in on this. And some names, the reason I've got some of these names like analog devices, which is ADI, in black, because some of these markets don't have as much of an interest as a few others. And here's what I wanted to share with you. Let's take a look at a couple of these stocks real quick, like IRF. International Rectifier is the name of the company. And we can see here, now this is my Genesis platform. What you can see here, this is based on a, this first window here is a monthly chart, this is a weekly chart, and this is a daily chart. So Candlestick aficionados, and this is, I think, just awesome to be here with Steve. Because Candlestick aficionados will understand that, boy, after this huge push in the market, this week, a weekly chart, we're going to form a weekly doji formation. We already have had, a degree of what we call a very poor, if this market is making a move up, it's making a move up on very little new highs. And more importantly, if you take a look at this daily chart, do you guys see where we made newer highs here? From on or about, and I'll expand on this chart. Here's where I'm looking at a volume divergence pattern live in front of you tonight. Something that we will be discussing even in our own trading community tomorrow. But many of you can see this particular pattern that from a point of interest on the volume analysis, this last peak in price was created on this date on June 10th. Then we had a new higher closing high. And as you can see, clearly we have a new higher closing value in price, and it came on a weakening volume level. So right now I'm starting to say, gee, here's a stock that has had a move. It enters clearly. You can see the seasonal trend starts to decline. All I'm looking for now is a trigger, a lower close, something to give me confirmation. And if it isn't just in this stock, then one of the other things that I like to do is I like to look at several of the names within that sector to say, hey, is it just one company specific, or are we seeing other names in this space with the same type of pattern? And as you can see, yep, volume fell off. This is Microchip Technologies. And we take a look at a company like, even though Texas Instruments doesn't come to it's not a name that comes to us as a semi-chip maker. Intel more does that, right? But when I start to look at multiple stocks within a sector that all have kind of like that same pattern, whereas the market rallies and it stalls, I start getting, a little bit more evidence that supports that perhaps that this is a sector that's getting ready to turn. And now what I like to do is look for the stock that has the weakest volume on that rally and has probably the more bearish looking chart patterns to it, because remember, fund managers and institutions tend to hold on to winners and sell out the losers, unlike the public, which generally tends to take the profitable trade and let the loser ride, hoping the loser come back. So money, in the old adage, money chases money. And in this situation, I'm sure you can relate to that if a sector's starting to turn, I'm going to take a look at these top 8 names here, and I'm going to be looking, except for Rambus and Intel, and I want to take a look at that with you live, because that's what we talked about in this presentation, is what's happening now and what do we see happening. Well, Intel's been on the move. It had a nice report, and they expect more more sales as people demand for PCs grows, which is always an interesting topic of debate. But as you can see, it's certainly Intel has had one fiery little move over the last few weeks, fired off one of our buy signals here on a weekly basis. The weekly volume is, as you can see here, the on-balance volume trend has been very strong. So this is actually the thoroughbred, the leader of the sector. So if the market is going to turn, this is probably the last stock in that sector to turn. And the reason I use on-balance volume, and as you note here, I do have the volume histogram bars. And as I was alluding to, a lot of times I ask people how many people have been confused by volume. And if you take a look at this is just a classic example of why volume histograms, it's not an effective tool to look at the trend of markets. You can clearly see the divergence as the on-balance volume's moving up. There's a rise in price, and the volume histogram's going down. So this is just one more example where volume can kind of confuse people to uncover healths of trends of the market. So when I'm looking for a sector to roll, and I'm looking for a sector to change, and I'm looking for a trade, I want to start looking at a trade that I can put a little analysis in and say, gee, if the market has been going up and it's on light volume, right, then it's probably susceptible for a reversal, especially when the whole sector comes under fire. If you know what I'm describing? So if the sector itself weakens, and if I can pick out a few stocks that look like they're either not gone up in association with that strength of that sector, man, I have, and it has had a rally on light volume, I got news for you. I have an increase of probability of making some pretty quick bucks on the downside of that trade. Now, so that's one sector that we're going to explore. The next one is, as you get into this sell in May, go away, and you hear the news about how great the stock market is. And the funny thing is, we've got this one sector called the Broker Dealer Index, the XBD. And if the stock market's doing so great, then we probably should see stock brokerage firms doing great, right? I mean, if the stock market's going up, people are trading, they're all making money, the XBD should be making money. And the funny thing is, here's some of the names that we have in there: Morgan Stanley, E-Trade, Ameritrade, TD Ameritrade in there, Oppenheimer, Schwab, you have BlackRock, Lazard, and we can take a look at some of these names, and man, they've done a great job. I mean, look at this. This sector itself has nearly doubled since November 2012. The funny thing is, as the overall market's been making a newer high, the XBD has not been making a newer high. And so when we take a look at that, I want to quickly go through a couple names here with you. Let's take a look at Charles Schwab, and it almost looks very representative of that overall sector. It hasn't made a newer high. In fact, this is one that is pretty perplexing. The fact is that it's not gone anywhere, and it's gone nowheresville fast. In fact, in the last, I would say, 6 months or so, since the beginning of the year, this stock's virtually unchanged. Charles Schwab really hasn't gone anywhere. Now, it's going to generate a weekly buy signal, but we've got another week or two before we really see that sector kind of melt down as we get into the middle of earnings season. So when I look at a daily chart on Schwab, I go, okay, so the market tried to go down. It had a big beautiful move to the upside 2 days ago. So if it had a big, beautiful move 2 days ago, someone needs to explain to me why it didn't have any volume associated with the move. So to me, this is one that is a classic example that of a stock that when the sector turns, they're going to yank the plug from this one. So Charles Schwab, by examining the on-balance volume indicator, it definitely shows that the market's had a nice little rally on little to no volume. So with that said, this could have been one of those one-day wonders. It kind of hangs up here for a little bit. I mean, if it's entering a seasonally weak period of time, I want to look for those type of setups where the market has had a rally on weak volume, as I was describing. So with that said, this is some other things that we like to pay attention to. In addition, it's easy to run a scan, by the way, and I think tonight we were going to talk a little bit about running scans. And think of it this way: in times when stocks are going up, there's a lot of stocks that are probably above their 10-day moving average. In fact, in the S&P 500, 357 stocks are above their 10-day moving average. 357 stocks are above their 10-day moving average. That's pretty amazing. One of the stocks I just clicked on Ben because Ben Franklin happens to be in the capital asset management capital market segment. And again, if the stock market's doing so great, boy, here's a stock that it's like, I wonder why these guys are they short or something? Because they're not making aggressive newer highs and have struggled most of the year. When we take a look at the competitors in this group, and by the way, there is a ETF, a specific ETF on Ben Franklin that we could look at. We have several that can come to mind. The KIE is one that we would look at for insurers. Okay, the KIE is the insurers and the components. And remember, I talked about the other aspects of financials, like for example, we have capital markets, you have the insurers, and one of the funny things here is that the insurers, which is also, I didn't have a slide for you that tonight, but I wanted to bring it to your attention, is a part of, as you look at the financial sector, the XLF. Remember we said that it has some banks in it, but it also has Metropolitan Life. Well, that's a competitor for Allstate. So there are certain times of the year that we find insurers kind of break down, and guess what? Allstate and some of the capital markets, as in the financial arena, we find that those sectors actually start to turn down. I go down the list here and I look at, here's one, Chubb. I just happen to know that name. And I say, well, gee, Chubb, compared to the two different names between Allstate, I'm battling a heck of a cold here. Between Allstate looks a lot stronger than Chubb, right? So if this sector starts to turn lower, what stock do you think is more likely to get whacked at the knees first? Which one do you think is going to get cut from the rug? It's most likely going to be coming from, if I had to choose between a short between Allstate and Chubb, it's going to be Chubb. And one of the reasons is because the weekly charts, we've had a stronger move to the upside, and this is a stock that has a better volume analysis to it. But make no mistakes, I think that there are some sectors that I want you guys to be pre-warned about, that we are going to enter some shifts in seasonal trends, and you're going to be like, wow, where did that come from? A couple weeks ago, we warned people about this sector, the IYR, which is the real estate sector, and we did see a nice little correction there. You saw like Avalon Bay Communities, AVB is the symbol. And when you take a look, and it almost looked like I didn't even change the symbol, but Avalon Bay, when we take a look at the individual stock, I mean, this thing just had a nice little correction, and guess what? It's entering a seasonally weak period of time. So when you take a look at that, VNO is Vornado Realty Trust, another REIT. It almost had the same type of chart pattern. So the markets right now are actually, there's not all sectors are doing as well as what maybe the media might present. And I think what we need to see is that there are some cracks in the eggs happening. And if you really want to get down to the nitty gritty, take a look at some of these sectors. The IYR is the real estate investment trust sector. The KIE, which is the insurer sector. And that may help you to, we don't have to look at all these stocks, but you can certainly look at some key subsector ETFs, and that might help us to get and uncover when we get a bigger correction coming. If the stock market is going to see further gains this summer, I'll tell you what. I mean, right now we're almost up 7%. This has been a great run, but like I said, I am starting to see some crossroads and some changes in the works as we speak right now. Now, whether it was the Janet Yellen effect, the quadruple witching effect, the end of the quarter, I could tell you as we get into July, we are going to see a tide of changes, and I want you guys to be kind of aware of it and just provide some information ahead of time. If we do see a downturn in the market, the broker-dealer sector is going to be, again, one that if volume starts to diminish, if the stock market starts to lose its little luster, these are names that should start to underperform, and we may want to take a look at that from some selling opportunities. Now, I know people have already been chatting about gold, and gold, in fact, we had strong support at 1240 underneath this last conditional change candle from way back here, the week that went back from January. And one of the things that we warned a lot of traders about was that as gold was moving lower in the weekly charts, right, the on-balance volume indicator was moving higher. In fact, that's why I think when I look at seasonal analysis, I just don't use seasonal analysis by itself. I use confirming indicators. Now, the bad thing, it's not bad, but we're looking for, this is a nice little candle pattern. Many of you candlestick aficionados would see we had pretty much that high close doji here, and I really wasn't expecting a huge move like this in gold to come. But one thing that we noted, and we warned a lot of people, and if anything, learned from this lesson, the on-balance volume indicator, if we take a look at marking a plot from point A, from this week's low to this week's low, in the volume, when we compare that to that week's low to this week's low in volume, you note that we had the volume actually had made a higher low at this point in time. So it was demonstrating that this was a weak low in the market. In other words, that maybe the selling had exhausted itself because we had a nice bullish convergence setup there in the market. The problem that I have is that it kind of caught us off surprise because we were actually getting long this market, and one of the things that we said is, hey, we got a seasonal tendency for the market to move up during the end of June into July, and that's the best time of the year to buy gold. So the bad news is if you didn't catch gold, then that's not really that big of a deal. There's no way that anyone should have been short the market, that's for sure. We had all kinds of warning signs. But I think over the next, I would say it might take another 5 to 8 trading days or so, but we should see the support here in the market get back into like the 12, believe it or not. If the market is still bullish, we see consecutive series of higher lows. And if the market comes back and even remotely gets back into the 1280 handle to 1285 over the next 2 weeks, we just might see a little bit of a pullback here. It might take a little while, but we still have a longer term seasonality with the gold market. So from perspective of where does gold go now that it's just had this amazing one-day wonder push to the upside? Well, the volume certainly, if you take a look at this, if you were just trading on-balance volume indicator and not price, pretending this blue line was price, the trend is up. And so I argue that longer term, gold actually, believe it or not, has still a very bullish story to it. And I'm not going to say that we could see 14 and a quarter by September, October period. But I think certainly going into next February, because that's about the time that we see seasonal peaks. Not a year from now. I mean, it's 6 months out. We could see a continuation of a trend to the upside. And I would say 14.25 could certainly be in the realm of reality. The reason I say that, folks, is because of this indicator right here, on balance volume. We did not see a typical sell-off. We did not get a typical sell-off on decline in volume. It just didn't happen. So the gold market really gave us kind of this setup with the on balance volume. It gave gold prices, saying, hey, I wouldn't get short down here by any stretch of the imagination. Some of you guys know my work, and you've seen before the last conditional change. And we had a last conditional change candle. This candle right there closed above that high. So over in time, the market against those lows, that's where it had support. Now here's the next thing. Just the opposite is true. You see this candle, this red candle right here? It closed below that low. So resistance is going to come here initially right above this high right there. I think I got a little too aggressive, which is just around 13.25, 13.30 handle. So at 13, right up in here, we ought to see the first test of that resistance, and I would imagine we see a pullback. Don't abandon the long side of gold, but don't chase gold up here by any stretch of the imagination. Better way of playing gold right now, and we typically see a delayed reaction, of course, is the gold miners ETF, and I think I saw someone chatting in there about GDX and all the stocks that are contained within those sectors. And so you can find that anywhere, but I think the difference is being able to qualify the trade. What makes one stock better than the next? And is it chart pattern? It's chart pattern, yes. It's also being in the right sector. More importantly, is there volume behind the move? Now, it's interesting. We also look at between the GDX and gold prices. One other thing that suggests that we are going to see higher prices to come still is that if you notice here, gold set up a classic bullish convergence between gold and the miners. Gold made actually a newer low, whereas and we take a look at the gold chart. If you take a look at this, as you can see here, we made that new lower low pattern, right? And we just barely made a lower low, just barely made a lower low. But look at the depth and look at the construction of this volume analysis. I mean, we got a pullback here, almost testing this level in there, and I mean, there was no volume behind that move. I mean, we should have been, if this market was weaker, we should have seen maybe the volume come back down into testing into that level, and we just didn't see it. So the exciting thing is, I think there's a lot more resiliency in the gold and the GDX and the gold miner sector. Now it's a matter of, let's go from a top-down approach. Like we say, not all stocks are created equally. And so when you take a look at some of these names, and that's where volume can help you immensely. Let's take a look at one that it just did not have any connection with the gold market in today's move is Freeport-McMoRan, FCX. In fact, it was negative on the day. Might because of a little bit of weight with copper prices, but still we should have seen a substantial higher move. Barrick Gold. Now, Barrick Gold, from a seasonal perspective, it's, as you can see here, it's a little early, but by and large, we have a breakout pattern happening with the on-balance volume. And just a case in point, I don't know what this stuff tells you. And so if you're trading in the volume and using volume histogram, if you've been frustrated investor, I think you'll find there's a few nuance techniques that we use with the on-balance volume indicator. Because it is a line chart, it subscribes itself to trend line analysis, like a trend line resistance breakout technique, trend line breakout and regression to the mean. There are several techniques that you can utilize with on-balance volume that we can teach you to use that are some pretty amazing anomalies to pick up that can give you some clues about the trend or health of the market. So when you're looking to get into a trade and say, and this is the thing when we get into a trade, it's like, is this the one that's going to have the move, or should I expect I'll take a little profit? If the volume is, as the old adage, volume precedes price, and as you see volume starts to move up and price hasn't. For example, I can start to share with you real quick, go back in time. And this is one of the things that this is actually one thing that we look for. We have a trend line break. The market breaks out of a simple little trend line. We got starting to see a rise in not higher highs, but higher lows, more importantly, right? So, you got a couple buy signals now. The price is starting to move. We have a move above this last conditional change, this red candle here. We closed above that high, so we're starting to see a breakout to the upside. And now here's the little pickup that I want to share with you guys that might help you. So the market price makes a higher high, right? And if you take a look, this old high right there, it's hard to see. That's why I threw a moving average over it. You can see that right in here, the on-balance volume indicator actually ticked through my moving average, right? So we can throw an indicator on top of an indicator. That's one of the neat things that we can do. But more importantly, the market, not only did it make a higher high, a higher closing price high, but it did so with attitude in volume than the fact that the on-balance volume indicator right here took out a previous high. So now you've got higher lows and you're starting to develop higher highs. So you're starting to develop a bullish trend in volume, which is confirming this move. All right, so maybe you didn't catch any of the gold market today, but that's okay because there's going to be more opportunities. And I think if we can prepare you guys for what can come, you can obviously see volume preceded price. I still think that this is a very viable sector going forward based on the longer term analysis. We had a high close doji last week in ABX and in the gold miners. In fact, this was one that we actually were telling people to look out for from buying perspective. And at this point in time, I think there's still a lot more leg room here, but you want to look for a pullback. And if it doesn't happen this week, fine. Don't chase the market. We have an opportunity for a market to pull back, and if it is going to be bullish, guess what? You're still going to see a consecutive series of higher lows. And if you do see higher lows, then just imagine what would happen if the market pulled back in time from 18 to like 17 bucks. If we pull back to 17 bucks, I mean that's a hefty percentage decline. But if it pulls back to 17, you're still making, in this grid, a higher low, and you're within the pivot support targets. So over time, the funny thing is that whether it's Barrick or any other of the gold mining stocks, you still have some pressure to the upside based on the volume analysis. So that's one of the things that hopefully you guys caught that. How do we constitute, seasonal analysis will tell us that, hey, there's a move about to come. I don't know if it's going to be a week early, a week late. It's not perfect. Don't get me wrong. Seasonal analysis, everyone puts too much faith in it. Technical analysis supersedes seasonal analysis. Just remember that. But there's few choice technical tools that we can use. Even my person's pivot indicator was, for the month of, or looking at this time frame, notice that the red bar is higher than the prior red and the green is higher than the green. It was actually giving us a bullish bias in this sector. So that combined with volume, I think this market's making an interim term bottom, and there's going to be, I think, a lot more upside. I could see the GDX going into the September timeframe. Minimum objective, I think, is going to be back up to testing this high around that 31, 32 handle. Can it go a little bit higher? Sure, anything can happen, but I want to see, as the trend matures, I want to see volume associate as in accordance to the on-balance volume indicator. So Barrick Gold Mine is one that I think you can see some further gains, but look for pullbacks coming in here. I think sector analysis, looking at the top-down approach, it's very simple. You look at a sector or you look at the commodity trend. And then you look for leadership in that group. And the leadership in the group is followed by not just chart pattern, but also by the volume indicator. If there's more volume going into one stock, I mean, obviously there's an attraction that stock is seeing an increase in the trend, and it's associated with momentum. If the market's going up and there's no volume with it, they can easily yank the carpet out from under it. With that theory the reverse is true. If we enter a seasonally weak period of time, guess what? I'm looking for the leadership of the group in the other respect. I'm looking for the weakest stock, the one that's rallied on the lightest volume, because that's the first one that they're going to toss out. They're like throwing a baby with the bathwater right out the window. I can use my PPS indicator to scan for buy and sell signals within those sectors, and that's one of the things that we created with Trade Navigator. I can find all these scans, not with just a doji formation, but I can find a low close doji, and I can look for stocks that gave me buy signals. I can scan for, not only do I scan for stocks in the S&P 500, but I break it down to sector. So like for example, today we had 69 stocks that generated a PPS buy signal. So for example, look here with Adobe, for example. So Adobe, we have a long stock, and when I take a look at this particular name, I'd say, well, what sector is it in? Well, the seasonal's not too good, and the markets had this incredible weekly. If you take a look, this is one that I think is an exciting potential trade coming soon from the short side. Mainly because, as you can clearly see, now today's not Friday, it's Thursday, but clearly we're making a newer high. And the funny thing is we're making a newer high with no volume behind it. So this is one name that's on my radar list, and we're going to be looking not for it to give me a buy signal, but we'll be looking for that name when it finally helps to generate. And what we do here is we got how many stocks generated sell signals. So today, by the way, only 7 names, and look at some of these names. They're despicable. ConAgra, Coach, Discovery, F5 Network, Juniper Network, NVIDIA. Boy, I mean, NVIDIA is, that's funny because NVIDIA is actually in that semi-space that it too has had. If you look at this, we're seeing a common denominator, a rally in the market with no volume behind it. This is actually one stock that I would have to agree that the volume histogram confirms the on-balance volume, where the volume trend is lower as the price is rising. NVIDIA is in a sector that the market, it's in a weak sector. So we're trying to identify opportunities and say, okay, how can I get some better stock selections? If I can choose some better trades, I don't have to trade as many times, and I can put a decent position on when I have the evidence that supports a potential trend reversal. And so maybe I won't trade NVIDIA. Maybe I'll trade another stock in that group. But I'll use the information as confirmation that that grouping is starting to see a weakening process or a topping process, more or less. So with that said, I think those are the things that how we can really incorporate different tools and using volume indicators to help confirm those trends. Now, here's a little exercise for you guys just to share with you. Is the trend of the volume and the on-balance volume in sync with price? In other words, we have this trend here in price. We have this trend in the on-balance volume. And at the same time, we have this trend with the volume histogram bars. Does everyone sees that, right? Now we have a decline in price and a decline in on-balance volume. And over time, we have a decline. I mean, of course, there's a couple days that we saw some pops, or a couple weeks we saw some anomalies in volume spikes. But overall, the trend is down, with the overall trend being down with on-balance volume. Then all of a sudden, price starts to pop up, and guess what? On-balance volume goes back up. And hey, coincidentally, so does volume. Volume goes up. Then price kind of goes lower. On-balance volume confirms that decline, and that decline is on lighter volume. And then all of a sudden, another trend up, and we get another trend up here, and it confirms on-balance volume. So you would actually say to me, and I would say to you, that volume and on-balance volume is in sync with price. So why would I use on-balance volume? Well, let's go to the next chart real quick. So let's take a look at this. Trend is up, volume is up, but the volume is down. I mean, the volume started to go up to about right here, and then volume started to go down, and that the trend continued to move up. And we saw mild sideways action. We saw sideways action here, and all of a sudden the volume started to spike up. Then all of a sudden we saw a nice breakout to the upside, supported with a move in on-balance volume, but overall volume is down. Clearly, the on-balance volume and the volume is not in sync with prices. So what the heck's the difference? What just happened? By the way, look at this. This is the same company. It's the same name. I just picked this out of the hat. We were doing an exercise and did this last week. So what's the difference in the situation? I'm going to explain the situation to you. I'm not going to ask the question because this is a very large audience tonight, and I'm sure if I asked for a survey, it would just send the thing ballistically. So the moral of the story is, I think everyone can see what I'm referring to. So what happened? What caused this stock to get out of sync? Well, the first thing is I want to share with you is this is from 2004. This is IBM. This is pre-2005. This is post-2005. Same company. All right. So what happened in before 2005, and what's happened after 2005? And here's what's happened. More stocks, more traders use options. And therefore, I believe that options, dark pools, more and more institutions are matching their trades within their own platforms. So if Goldman Sachs and Morgan and JP Morgan, Morgan Stanley, if they're matching, they have several hedge funds, and someone has a 10,000 block order to sell Google, they're going to match it up with someone that has their other side. So they have their own engine matching dark pool, and then they report that trade to the exchange. So there's that issue. There's the issue about optionable trades. A stock that's heavily optionable, more people, why have your capital tied up when in fact you can just do a synthetic synthetic long position? You sell a put and you buy a call, or perhaps you just want to take in some premium, look for the market to move and do a strangle. So there's all kinds of options strategies, and that's why I believe that the volume histogram has been less effective in the last 7-8 years, and it's been frustrating traders because traders still want to believe that volume histogram is the way to go. And it's true, volume is the lifeblood of the market. But to determine the health and the trend of the market, I think in this day and age, you need to go back to the old indicator called on-balance volume, experiment with it. We teach how to use this effectively, and clearly there's a disconnect between volume histogram and on-balance volume amongst multiple markets. In fact, probably one of the most frequent is the current market, which is looking at say the spiders. If you take a look here, here we have a clear malfunction for those that were using volume histograms, saying this market can't go any higher. In the spiders, the funny thing is we have a volume breakout on the moving average. On balance volume is moving up. Clearly, you can see the trend moving lower in the volume histogram. And so the funny thing is, on a weekly chart, here we have higher lows, and we still have higher lows ensuing in the S&Ps. We are, by the way, for the record, coming up to not the monthly, but incidentally, the quarterly pivot resistance, quarterly runs from quarter to quarter, is got a little bit higher to go, but we're coming a little bit of see a change coming here in another week or so. Let me share this with you. Look at the Qs with me real quick, because this is one that we actually took part in on getting into the 90 calls on this one. We were calling this market. We had a nice little buy signal, and seasonally the technology space is stronger going into July. But a lot of people didn't feel convinced about it because they saw the volume histogram was moving lower. and they just didn't feel compelled. Well, we had a nice high close doji formation, and the market took off, and it actually went beyond where I thought it was going to go. I was looking for a 3% move, and it went a little bit higher than that, actually. But the moral of the story is it's the volume, on balance volume indicator that works best in this environment, and whether it's the individual ETFs or individual stocks, it's certainly a very viable tool to use, and that's one of the things that we want to help traders understand how to use. So again, pivots are great, and as you know, I use my own indicator daily, weekly, monthly, quarterly basis. It gives me a guide as to whether we're at significant support or resistance, but seasonal analysis really helps me to define when a particular sector may enter or exit seasonal strength or weakness. And again, that volume histogram, and now it's just a matter of coming up with the right strategy. So with that said, if you guys are interested, I hope you got a lot out of tonight's presentation. Steve wanted me to make a great, fantastic educational offer to you guys. I would suggest, if you're not familiar with my work, you have a link that you guys can click on, and if you click on that link right there, I've just put it in the room. You can go straight to that link, and I believe that will give you your choice of $89. These courses were over several $100s, but for this weekend, they're $89 to the Candlestick Forum event for you folks. If you're interested in this, it's fantastic education. If you're not familiar with my work, I might recommend, if you're a stock trader, if I could, I would strongly recommend to pick up the Advanced Traders course, this one right here. That Advanced Traders course has a complete listing of the seasonalities of stocks, sectors. It has the complete outlay of how to use the on-balance volume, my pivot analysis. This was my very first course. This one right here is a fabulous product for those that are new to the markets, that want to get a handle of pivots and candles, especially my proprietary high close, low close doji. And then again, if you're a Forex trader, the Forex came included with the trading system methodology, using different various moving average components, not just based on a close, but on momentum indicators like a moving average of highs, moving average of lows, etc., etc. So each one of these courses are fabulous, and if you are looking to refresh your memory, I believe the Advanced Trader course had a nice section on some of my directional trading strategies. Remember, I started trading, well, maybe you don't know this, but I actually cut my teeth trading bond options back in 1984. That's when we first started trading options on the futures. The first market they introduced an option on was bonds. So I've been trading treasury bonds and options on trading bonds for now 30-year anniversary. And that's, for me, quite a long, illustrious career. So as you can see why I was all excited about having the 47th issue of the Stock Traders Almanac dedicated to me. But with that said, I would certainly take advantage clicking on that link. If you're interested in day trading, I would go with the day trading techniques. Was more for this course right here. This was more day trading. This was Forex. This was more for swing and position trading for stocks, and using different sectors, including I think there's a nice little section in that Advanced Traders course on the commitment of traders. Fabulous product. You can go to the website, check it out, click on that link. It's a special link geared just for Steve Bigelow, your clients. So if you're interested, I strongly recommend scoop that up for $89. That is a deal. Not only is that a deal, it's incredible information, and I think that a lot of people get, and I know this day and age, everyone's had like information overload possibly. But if I think there's, a nerve I may have struck with some of you, especially on that volume, and I seem to have been going around the country. In fact, I'm going to be talking to a group out in North Carolina this weekend. And everyone I go out to and I ask, how many people struggled? I had a gentleman who was an engineer in Los Angeles. We just did a 2-day live trading seminar in Los Angeles. Guy was an engineer. And I said, how many people struggle with volume? A bunch of people raised his hand. This guy didn't. And I said, so you don't have a problem with volume? He says, no, I gave up on it. I stopped using it 5 years ago. And I thought it was kind of funny. It was a great story. The guy stopped using. He says, I don't have a problem with volume analysis anymore. I stopped using it. And I asked him why. He says, because darn stuff doesn't work. He says, it got me into more trouble than it was worth. I'd be long and the market didn't show any volume, and I'd get out and the market exploded. He says, I just found it useless. And that's when I offered the explanation. I think that's the funny thing is, I think the reason why we saw that is the advent and the increase in popularity amongst options traders and options positions. And so when you trade an option, it's less likely to see the volume in the underlying stock. So in any event, I think if you guys are interested, great information. It's fabulous information. You guys will not be, I don't think I've ever put out information that isn't spectacular, that most people find that helps their trading. And that's all you're looking for, is to get an edge in the market. So with that said, I want to say thank you all very much. And more importantly, thanks Stephen for allowing me to present to his group. And Steve and I, we, like he said, we go way, we were introduced, a long time ago. And anyway, I was glad to be here. Everyone, have a great evening. Thank you all very much.